Hey everybody, and welcome back to the channel. Today, we're diving deep into a topic that might not be on everyone's radar, but maybe it should be. Silver, and specifically, why its role in the next potential economic crisis could be much, much bigger than most people realize. Now, when you think of safe haven assets during a financial storm, what's the first thing that comes to mind? Gold, right? It's the king, the ultimate store of value for thousands of years. But here's the thing. Gold has a little brother, and that brother is silver. And sometimes, the little brother has some surprising moves. Let's break down why silver is so unique. Unlike gold, which is primarily a monetary metal sitting in vaults, silver wears two hats. It's both a monetary metal and a crucial industrial metal. This dual nature is the key to understanding its potential. Think about the world we live in. We're in the middle of a massive green energy transition. What do solar panels need to function efficiently? Silver. What about electric vehicles? They use more silver than traditional cars. Our smartphones, our laptops, 5G technology, medical equipment, the list of modern essentials that depend on silver is incredibly long and growing every single day. So, on one hand, you have this relentless, ever-increasing industrial demand. This demand isn't just a nice-to-have, it's a must-have for the future of technology and sustainable energy. This creates a solid floor under the price of silver. Companies need it, and they will buy it. Now, let's look at the other hat, the monetary one. For centuries, silver was money, right alongside gold. It's often called the poor man's gold, but I think that misses the point. It's more like accessible money. When people get nervous about the stability of banks, the value of their currency, or the state of the economy, they look for something tangible, something real, to protect their wealth. This is where things get really interesting. Imagine a scenario where we face another significant economic downturn. People start losing faith in the system. They rush to safety. Gold prices will likely surge, as they always do. But gold is expensive. A single ounce can cost thousands of dollars, putting it out of reach for the average person looking to protect a small amount of savings. What's the alternative? Silver. It's divisible, it's more affordable, and it has the same historical precedent as a store of value. So, while big institutions and central banks might be loading up on gold, the average citizen, the Main Street investor, is far more likely to turn to silver. This means you could see a massive wave of retail investment demand flooding into a market that is already being squeezed by industrial needs. This is the perfect storm for silver. A demand squeeze from two completely different, powerful forces happening at the same time. The industrial sector needs it to build the future, and the investment sector needs it to preserve wealth from the past. Let's talk about supply for a moment. Where does all this silver come from? About 80% of silver is mined as a byproduct of other metals, like zinc, lead, and copper. This means miners can't just decide to produce more silver. If the price of copper or zinc falls, they might reduce mining operations, which in turn reduces the supply of silver. Regardless of how high the silver price goes, the supply is inelastic. It can't respond quickly to spikes in demand. We're already seeing a supply deficit in the silver market, meaning we're using more silver than we're mining each year. This deficit has been happening for several years now. Where does the extra come from? Above-ground stockpiles and vaults. But these stockpiles are not infinite. You can see the inventory at major exchanges, like the COMEX and the London Bullion Market Association, trending down. That's a critical sign. So, let's put all the pieces together. We have skyrocketing and non-negotiable industrial demand from the green energy and tech revolutions. We have a constrained and inelastic mining supply. We have shrinking above-ground inventories. And on top of all that, we have the looming potential for a massive surge in monetary demand from regular people during an economic crisis. This isn't about predicting a crash or telling you what to do with your money. This is about understanding the fundamentals of a unique asset. The gold-to-silver ratio, which tracks how many ounces of silver it takes to buy 1 ounce of gold, is also a fascinating indicator. Historically, this ratio has been much lower than it is today. A return to the historical average would imply a significantly higher silver price compared to gold. When you look at the big picture, silver isn't just a shiny metal. It's a critical component of our future infrastructure and a historical safe haven for the masses. The combination of these factors creates a dynamic that is, quite frankly, explosive. While everyone is watching gold, silver might just be the dark horse that surprises everyone. It's the intersection of past and future, of industry and investment. And in the next economic crisis, that intersection could be the most exciting place to be. What are your thoughts on silver? Do you see it as just an industrial metal, or does its monetary role still have legs? Let me know down in the comments. Thanks so much for watching today. If you found this information valuable, be sure to hit that like button and subscribe for more deep dives into the markets. We'll see you in the next video.